Good morning, good morning, good morning. Welcome to today's Morning Blast with myself and Mr. Michael Brown. It is Thursday, the 17th of July, all day. As usual, we'll be giving a preview of yesterday, a review of yesterday, a preview of today, bit of value, bit of swears, see what happens. Probably have a go at Rachel Reeves. It's kind of what normally happens at this point. But before we do, let's get the legals out of the way. Nothing discussed on this space is set and constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown.
Very good morning to you, Ryan. Good morning, everyone. We can do a little bit of hindsight trading if you like, mate.
Yeah, why not? It's the best way.
Previewing yesterday, 100% win rate on every trade here on the Morning
Sort
Blast.
the low, sort
Unless
the high, haven't we?
unless it's Pony AI, we'd still fuck that one up, I'm sure.
God, the one that got away.
Galloped into the distance.
Oh, well done.
Oh dear. How are you this morning, mate?
Not too bad, mate. Not too bad. Yeah, that's about it, really. It is what it is. I'm feeling a little bit lost this morning. I don't know really what's going to happen.
Oh, diddums.
Sorry. How about you?
Mate, I've got the hump, to be honest.
Oh, why? Why?
Well, we've got, Trump messing around with Powell. We've got the UK labour market on its knees. And I'm also dealing with people giving incredibly ropey excuses for not turning up to work. So it's a perfect
Oh,
storm this morning.
oh, mate. Oh, well, I'm sorry to hear that.
Nah, that's all right, mate. That's all right. I'm sure you can brighten my day.
Well, I'll try, mate. I'll try. Might be around for a pint later on. Anyway, look, what's going
Yeah,
on?
I was going to say, should we just crack on? We're just going to have a
Yeah,
chat,
right.
otherwise, aren't we? It's going to descend into
Again, I kind
complete
of forgot.
anarchy if we're not careful.
Again, I kind of forgot other people were listening in. But anyway,
Yeah,
right.
so no, apologies to the one man and his dog who is still listening to this program this morning. We should probably crack on and provide at least some market intelligence to you. Let's start with the whole Trump shambles, which, as I said, was complete mayhem, to be honest with you, for an hour or so. And even more annoyingly, it happened while I was stood there having a pint. So I was considering running back to the office on numerous occasions. Anyway, what happened yesterday afternoon, about 3:45 London time, reporting by CBS that Trump had been in a meeting with GOP lawmakers in the United States. He'd been asking them what they think about Fed Chair Powell and the job he's doing, which, let's be honest, they're only going to give one answer. And he apparently indicated to those lawmakers that he would be firing Fed Chair Jerome Powell. Around about half an hour later, Bloomberg picked up on comments from a White House official, an unknown White House official, it must be said, unnamed, forgive me, who commented that Trump is, quote, likely to fire Chair Powell soon. This, of course, coming from an official White House representative. And that reporting was followed up about 15 minutes later by the New York Times, who noted that President Trump has drafted a letter to fire the Fed chair and was apparently walking around this meeting of GOP lawmakers waving that letter around in the air, in true Trump fashion. Of course, the market reaction to all of that was very much as you would expect. The dollar falling off a cliff, the curve steepening pretty significantly with the 30-year back above 5%. And we also saw equities taking a little bit of a tumble on that as well. All for about an hour after this mayhem began, Trump to turn around in the White House and go, "No, I don't know what you're on about. I'm not talking about firing the Fed chair." So back where we started, and a decent chunk of those moves unwound. What was it all about? God knows, to be completely honest with you. There is a case to be made that this could be a little bit of a sort of trial balloon where Trump was more
Yeah.
seriously floating the prospect of getting rid of Powell in order to sort of gauge how the market would react and then, use that intelligence as to whether he actually wants to follow through with it or not. There is a case that says this was actually another way of Trump trying to pressure the Fed into getting lower rates. To be completely honest with you, I'm not entirely sure what the reasoning behind all of this was. There was clearly no smoke
Yeah.
without fire. He did have this letter. Sorry, Ryan, just lastly on this, I would stress, though, that there is no way for Powell to be sacked. So all of this mayhem and furore, the Fed chair cannot be removed unless it is, quote, for cause. For cause does not cover Trump wanting rates lower than they are actually set. For cause covers things like gross misconduct, which frankly is not happening. So there is no legal precedent here. I would be keen to know what was actually in this letter and the rationale that Trump would be using. But yeah, an hour of chaos, which basically landed us right where we started.
So I'm going to pat myself on the back here because I said, I believe it was Monday, that because of all the uproar with the Epstein file, or is there an Epstein file? I said I wouldn't put it past Trump to make some serious noise about sacking Powell, just to slow and that kind of ratchet that up to then slowly get the media's attention away from that and onto the Fed chair. And that seems to be what's happening. He might not get anywhere with it, but he's definitely drawing the media's eye away, and it's a very easy win for him to do that.
Yeah, no, and yeah, I've got to give you praise now, but well done.
Hey,
You did say that
write
that
that
was a
down.
distinct possibility, and even a broken clock is right twice a day, I suppose.
I'll take twice.
Well, you could be a digital clock and right once, but I didn't want to go down
Well,
to be too harsh on you. Right. Anyway, moving away from all of that Powell nonsense and on to other matters that we had yesterday. Let's get to the issue of trade. Of course, tariff headlines still in focus. We are, I think, 2 weeks today, I believe it is, from the latest tariff deadline, which is, of course, on the 1st of August. We didn't really have anything on tariffs out of the US yesterday, but we did hear from Bloomberg, citing sources within the EU, that most EU members still favour trade talks before this 1st of August deadline, but that France is starting to build support for using the anti-coercion tool if there is no trade deal with the US. That sounds like a very oddly named instrument. It is basically the EU's sort of most potent trade weapon, and would also involve going after some of the US big tech firms. So would very much rile up President Trump if they did go down that route, but it looks like they will keep that in reserve in the instance that a deal isn't made. We also heard from Switzerland yesterday, the Swiss government noting that a trade deal with the US is apparently awaiting President Trump's sign-off. Again, we don't really know what's in this deal. We don't know when it was agreed, and we don't even know if Trump is actually going to sign it off. But at least the Swiss believe that they have a trade deal, and that would, of course, be the 4th trade deal that the US have struck since Liberation Day. I thought you were going to jump in with something there, Brian. Sorry.
No,
Right, fine. Never mind. Moving on to data from yesterday and from overnight. We have the latest PPI figures out from the US yesterday. I need to have a bit of a rant about this. PPI rose by 2.3% on a year-on-year basis in June, well below the 2.5% consensus and the 2.6% prior, and prices were actually unchanged on a month-on-month basis. Of course, all the usual suspects then run around on the internet going, oh, there's no tariff inflation. Well, you need to remember here that tariffs are not included in the PPI calculation because PPI excludes imports from the data. So you only see any potential indirect tariff effects. And this is a point that actually our good friend Dario Perkins has made a number of times, in that actually the usual relationship where PPI leads CPI is kind of broken at this point. When the inflationary impulse is coming from tariffs, that's pretty much going to just be passed straight on in the form of higher consumer prices, and there's really no point looking at a supposed leading indicator that actually doesn't include the thing that we're all worried about. So PPI, not really worth the paper that it's written on. We also had the latest industrial production stats out of the US yesterday, production rising by 0.3% on a month-on-month basis in June, a rebound from the 0.2% decline that we saw in the month of May. Sorry, I got distracted by an email there. And we also this morning have the latest labour market numbers out of the UK, which were utterly grim. Unemployment rising to 4.7% in the 3 months to May, above the 4.6% consensus and the highest level since the middle of 2021. Earnings growth did continue to cool, with average regular and overall earnings rising by 5% apiece on an annual basis, down from 5.3% in the month of April. One thing that we did see again, though, is public sector wage growth at about 5.5%, outpacing private sector wage growth. So as long as the civil servants are all right, I guess that's fine. We also, of course, had the latest HMRC payrolls indicator, which is a much more timely gauge of PAYE employment. According to the HMRC payrolls indicator, employment fell by another 41,000 in the month of June. That makes it now 8 consecutive monthly declines in payroll employment here in the UK, i.e. every single month since the budget last year that the UK economy has shed jobs. Who on earth would have predicted this one? You raise the cost of employment by higher national insurance contributions and a lower threshold at which those are paid. You raise the minimum wage, which piles further costs onto businesses. You lower the age at which that minimum wage has to be paid, which puts even more costs onto businesses, and businesses can't afford to have the same number of
Follow
staff.
me, Swat.
Whoever would have seen that coming? Rachel Reeves, who has seemingly gone into hiding over the last couple of days, you reap what you sow. Ultimately, she has sown the seeds of a job-killing budget last October, and that's exactly what we're seeing. And frankly, I don't
Get
see
in the
any
Thames.
way. Sorry.
Get in the Thames.
Yeah, well, yeah, I was going to
Not
say at
you.
this
Not
point,
you.
I don't see any reason for optimism in terms of the labour
No.
market whatsoever. The more worrying thing, if those figures weren't worrying enough, the more worrying thing is that you kind of go, are there any potential signs that things could be bottoming out? And the answer is just no. So I think we are in for, sadly, a very, very grim summer here in the UK in
This is
terms of
what
the
we said.
employment backdrop.
This is what we said yesterday. It's like it's not even like we've got good news to look forward to. We've got tax hikes coming in the autumn.
Hmm.
We've already been told there's more bad news coming.
Yeah,
Oh,
absolutely.
yeah.
It's all a bit grim, to be completely
Yeah.
honest with you, but there we are, ex-BOE economist, so I'm sure she's got it all under
Well,
control. Uh,
yeah.
anyway, moving on from that, just a few other bits and bobs from yesterday. Of course, earnings season continuing with the big banks. Bank of America, a little bit mixed, missing on revenues, but beating in terms of profitability. Trading revenues, obviously strong. Trading revs also strong at Goldman Sachs, where the equities desk brought in $4.3 billion in trading revenue in the second quarter, which is not only the best such figure in the firm's history, it is also the best such figure in Wall Street history. So at least all the volatility around Liberation Day was good for someone. And then Morgan Stanley delivering top and bottom line beats as well. Couple of other things in the EU. The EU has proposed a draft budget of about 2 trillion euros with a T for the period between 2028 and 2034. Quite why they're doing that 3 years in advance, I'm not entirely sure. Apparently, very precise number, but 589.6 billion euros of this budget will be used for, I quote, competitiveness, prosperity and security, whatever the hell that means. Unsurprisingly, the Germans are throwing a bit of a tantrum about this and have rejected those proposals, so there's going to be some wrangling going on around that for quite some time. Sticking with the EU, Portugal, they are going to be replacing Centeno as the governor of the Portuguese Central Bank. Centeno's term expires on the 19th of July, which is Saturday, and apparently the government are going to announce a successor in the coming days, but they are not clear who that will be. So they are clearly very well prepared for his departure in 48 hours' time. It's typical sort of Southern European way of doing things, I suppose. And last but by no means least, one headline in the AI space, Truth Social, of course, President Trump's favourite social media app, they are apparently going to integrate AI into their mobile app and website. What on earth could possibly go wrong with that one?
Brilliant. Thank you very much for that, Mr. Michael Brown. Just read off some of the choice headlines from the overnight news roundup, courtesy of our dear friend Zach Eisman. As usual, do subscribe on the Substack, etc., etc. Start off with trade. Trump has said the US is very close to a trade deal with India, while an agreement could possibly be reached with Europe as well. But it is too soon to say whether a deal can
Sorry,
be agreed.
sorry,
Go
I'm ranting. I've got to rant again. If anyone from
on.
ING is listening, how on earth can they send a research note with a straight face that says, and I quote, less alarming UK jobs data? What
What?
was less alarming about it?
When did they just post that?
That's literally just popped up in my
Oh,
inbox.
God, I like ING stuff. It's nice and easy to read, but bloody hell, guys, have
They've
a
let
word.
themselves down then.
Yeah,
Apologies for interrupting you,
that's
right?
fine. No, no, rightly so. Pull them up. What else are we doing? Some Trump administration
What
officials
are
are
we
holding.
doing this morning?
What day is it? What year is it? Some Trump administration officials are holding up efforts to finalize a landmark agreement that would open the door to the UAE buying billions of dollars of Nvidia's cutting-edge AI chips. This is due to national security concerns, in part because some officials have expressed concerns that China could get access to the technology, i.e. sell to the UAE, they then resell onto China. Japan's exports, they fell for a second straight month in June, fueling fears of US tariffs will halt the nation's economic recovery and complicate the central bank's policy plans. Obviously, as we know, all eyes on the BOJ to see what they're going to be doing next. A record share of American firms froze investments in China as trade ties worsened earlier in the year. That's according to a survey by Bloomberg. Obviously, we're seeing a de-risking trend with China from multinationals, etc. In macro news, Trump said he would love for Fed Chair Powell to resign, but it would disrupt the markets if the president were to remove him. Obviously, he said this after floating that little trial balloon up and going, fuck, the market doesn't like this. Obviously, I'm not paraphrasing there. Fed's Williams said that monetary policy is in the right place to allow central bankers to monitor the economy before taking their next steps, while warning that the impact of trade tariffs is only just starting to hit the economy, expecting a 1% percentage point increase in inflation over the second half of the year. More than 2/3 of Japanese firms believe the government should compile an extra budget later this year to mitigate the impact of Trump's tariffs. That's according to a Reuters survey. Obviously, this points to fiscal stimulus risks in Japan affecting global yield curves. Obviously, we saw some contagion from the 30-year JGBs flying over into like German bonds, etc. earlier on in the week. The value of Chinese companies' new investments and construction contracts in countries that are part of President Xi's Belt and Road Initiative has hit a record high this year. That's gone to a new study. This is quite notable because there were talks that this Belt and Road is kind of falling apart, but seems like they're pumping a load of money into it. So what do we know? In
Well,
equities,
just a mere speed hump in that road, I presume.
well, stop it. Just another notch in the belt.
Oh God.
TSMC posted a 60% jump in second quarter profit to record levels that handily beat market forecasts. This is in addition to raising its guidance above expectations, noting demand for AI is getting stronger and stronger. OpenAI, their rival Anthropic, is in the early stages of planning another investment round and could value the company at more than $100 billion with a B. That's according to Bloomberg sources. Tesla, they haven't done enough to protect against drivers misusing the autopilot system. A safety expert testified at a trial over a 2019 fatal collision. So we're actually seeing kind of a little bit of a rise in these court cases coming to market with autopilot and FSD and all that stuff. And it kind of is timing in well with, well, I say well, not well for Tesla, with some kind of quite senior people leaving Tesla as well. So want to keep an eye on there. And finally for me, Alimation Couche-Tard, no idea, poured its
What?
Alimentation Couche-Tard pulled its $47 billion bid to buy Seven and I Holdings, citing lack of constructive engagement by the Japanese retailer. I believe Seven and I, is that not related? I might be wrong here, but is that not related to like the 7-Eleven stores in Japan? I'm not sure. Anyway, that's it from me. Back to you in the studio.
I'm still trying to decode the first part of that message, so be fucked if I know who they are.
Alimentation Couche-Tard. There you go.
Right, we'll let Del Boy carry on with his pronunciation lessons and move on
Yeah.
to what's going up today. Well, actually, I'll fuck myself over there because if you're that makes me Rodney, and it's not exactly flattering. What is it?
Yes. Well, some would say more like Uncle Albert, but moving on.
Oh, well, here we go. We should do this in Batman and Robin costumes.
Well, you haven't seen what I'm wearing.
Oh, God. Right. Very quickly moving on from that. In terms of the day ahead, what do we have on the docket? Well, at 10 o'clock this morning, we have the final Eurozone CPI figures for June. That data is expected to be unrevised at 2% on an annual basis, of course, bang in line with the ECB's price target ahead of their meeting next Thursday. Into the US session this afternoon, we have a handful of notable releases, including the June retail sales figures. Sales expected to have risen by 0.1% on a month-on-month basis, rebounding rebounding from the 0.9% decline that we saw in May. The control group sales metric, meanwhile, which is of course the basket of goods that feeds into the GDP report, that's seen rising by 0.3% compared to the 0.4% rise that we saw in May. Also from the States this afternoon, we have the weekly US jobless claims numbers. Initial claims seen at 234,000 in the week to the 12th of July, up from a prior 227. Continuing claims, that's seen holding steady at 1.965 million in the week to the 5th of July. And do note, of course, that the initial jobless claims print does coincide with the July non-farm payroll survey week. And also out of the States at 1:30 London time, 8:30 on the East Coast, we have the latest Philadelphia Fed manufacturing figures. That index is expected at -1, up from a prior -4. In terms of other bits and bobs on the docket today, a few speakers. We're due to hear from the Fed's Kugler, Daly, Cook and Waller. Waller doesn't speak until about 11 o'clock tonight, so I certainly won't be hanging around for that, but it will be interesting to see whether he does endorse the idea of a July rate cut once again. And then in terms of notable earnings today, the banks are done and dusted, but Q2 earnings season continuing. Before the market open, the main highlight comes from PepsiCo, and after the market close, one to watch, of course, will be Netflix, where options price a move of plus or minus 6.5% in the stock, which is lingering just shy of record highs, which we saw at the back end of June. So one to watch potentially after hours in the States. And for the time being, that's all from me.
Wonderful. Mr. Michael Brown, thank you so much as always, an absolute star. Listeners, thank you so much as always for tuning in. We really do appreciate you. If you want to throw us some money, that'd be welcome, or buy us a pint.
Never say no.
Exactly. Whatever you're doing today, if you are trading, keep it tight. But regardless, stay safe, look after yourselves, and we'll see you all tomorrow. Much love.
See you later.